It's been a while since I've done a video, so today I'll just do a quick market wrap. It looks to me like the euro put in a daily cycle low right here. Um, I told my subscribers um, yesterday after this rally, I said we can expect the ECB is going to try to intervene and turn this back down, and obviously they did today, but I don't think they're going to be able to stop this rally. I think there's going to be more than just 2 days in a rally out of a daily cycle low. Even if they do manage to uh, stop the daily cycle from making a higher high, I think there's got to be more than just 2 days in this rally. We're just in a currency war. Everybody wants to suppress their currency against their neighbor, and so we're just getting these wild, erratic moves. We're getting unusual cycle lengths. The last daily cycle in the dollar only lasted 12 days. That kind of thing is never going to happen naturally, but it does happen in a market that is being heavily manipulated. So looks like a daily cycle though to me. I don't think the ECB is going to be able to turn this back down immediately. So I think there's probably more of this rally to come. All right, so moving on to the S&P, the stock market. I keep warning people. Perma bears, um, always looking for a top in the market. We knew this was not a double top. This is a um, extended sideways consolidation. And let me widen the chart. All right. So the perma bears saw this as a double top or triple top, I guess you could even say, and that the market was rolling over and we were getting ready to enter bear market. That was not the case. It was never the case. This intermediate cycle was right translated. Um, Markets don't top. Well, very rarely does a market top as a right translated intermediate cycle. So, we knew from the get-go that we were going to come back up and make higher highs, and we're just in a year and a half sideways consolidation. The rule of thumb is that periods of easy markets are followed by difficult markets, and expand the chart a little bit more. All right, so obviously coming out of well, the election was here. This was the last 4-year cycle low, but an easy market, a very strong trending market, followed by a very difficult, choppy sideways market. It looks to me like we're finally breaking out of this sideways phase here. We're breaking out early in the intermediate cycle. That being said, we've got a major resistance, psychological resistance at 3,000. So I don't really anticipate that we're going to break through 3,000 and just keep, you know, climbing steadily higher. We may marginally break above this 1310 to 1320 maybe, but then I think we're probably going to get another correction, something along the lines of this, a daily cycle correction. Maybe it comes after the FOMC meeting on the 31st. The odds are still very heavily in favor that the Fed's going to cut a quarter point. So probably a sell the news type of event. Maybe we chop around this 3,000 for a week or so, and then we get a push above it, something that looks like a convincing breakout that causes retail traders to buy, and then we get a sell the news event when the Fed cuts rates a quarter point, and all those late buyers get caught, and they end up losing money, even though they're on the right side of the trade, because the cycle would quickly bottom, and then we are going to go above 3,000 on a sustained basis at some point here soon. So, but this is just how markets work. Retail traders are emotional. They tend to buy breakouts, but you don't want to buy breakouts late in daily cycles. That's a recipe for getting caught in a correction. But don't panic when we get a correction. It would just be a daily cycle correction, and they don't last too long, 5 to 8 days at most, and then the market will turn and go back up and make higher highs again. So I'm just looking for something that looks like this, maybe the end of July into the first week of August, maybe something like that. But this looks like we're going to get a sustained breakout now. I think this difficult sideways pattern is done, and I think we're ready to start the next trending move, similar to what we had here from 2016 to this top in 2018. Moving on to oil, my thesis continues to be the second half of 2019, everything goes up together. That includes oil. I said in one of my last videos I thought this was probably a half cycle low. Turns out that is correct. This was a half cycle low, and oil is making higher highs again, but we are again in this resistance zone around 60. I don't know that we're going to get through this easily. This may follow a similar pattern as the stock market. We kind of churn around this resistance zone and then get a pop above it maybe late in the month, and then oil follows the stock market down into a daily cycle low. So the late buyers that buy the push through resistance then get stuck holding the bag during a correction. Again, the correction would just be temporary, 5 to 8 days, and then we're going higher again. We're going to go above this last intermediate cycle low, or high right here. So corrections are to be bought during this period. Until we get above this, and I think there's even a reasonable shot that the oil could test the last 3-year cycle high up here around $77 during this intermediate cycle. So if you get caught buying a breakout and you get caught in a correction, I don't think you need to panic. You don't need to sell at the bottom. Corrections don't tend to last very long, just like this one here didn't last very long. And the price will soon turn and go back up again. And like I said, we're going to go above this, and I think there's a good chance we're going to at least test this high, maybe go above this high during this intermediate cycle. All right, and then moving on to gold. My last video, I floated the hypothesis that gold was in a triangle consolidation. So let me draw in what I think is happening here. Probably my guess is we're in something like this. We're probably going to bounce around back and forth. Maybe we respect these trend lines. We could go a little above it, a little below it, maybe widen the triangle a little bit. But either way, I think we're just in a sideways consolidation. This was a very strong move, got stretched quite far above the moving averages. Let me put the 50-day moving average in there. All right, so here's the 50-day moving average. You can see prices is still stretched pretty far above this moving average. We may have to just bounce around in this consolidation flag pattern, maybe into the end of the month, and then when the Fed cuts rates, then I would suspect we're going to break out and move to the upside. This is about a 170-point move from the I guess you'd call it the pole of this flag. Which should produce about 150 to 160 point move if we break out of the flag to the upside, which I think we will. So my guess is we're just going to stay probably stuck in this sideways pattern here for another week or two before we break out and then add another 150 points onto this move. And then finally, the miners, you can see we've tried twice now to break out above this major resistance zone here. It's not quite at 26, about 25.80, I think, more or less. Tried back here. It would be unlikely to get above that on the first try, and if gold is stuck in a sideways pattern for another week or two, then we may not succeed in in breaking through this on this attempt either, but I think we are going to stay locked a little above, a little below this resistance zone here as gold flags sideways, and then when gold breaks out, I think GDX is at least going to test the baby bull high here, close to $32. So I don't think we're only halfway through this rally, in my opinion. I think there's more to go, even though we may be in a difficult period for a little while. Remember me saying easy periods are followed by difficult periods. This has been a very difficult period for 3 years. It's time we move into an easy period, and we've started the easy trending phase here, this first move up. And now we probably got to consolidate a little bit, and then once we do get a breakout above this resistance, I think we're going to get another very powerful trending move, very similar to this one here, and at least test this baby bull high during the second half of this year, and probably I would say we're probably going to test that by the end of August or beginning of September. All right, so while we may be stuck in some sideways patterns and everything for a little bit, gold, oil, stocks, they're all kind of at some major resistance zones, and we may have to go sideways a little bit, maybe as we wait for the Fed to cut rates at the end of the month. But I don't see anything that would change my mind that my theory is wrong, and that everything is going to continue to go up together during the second half of the year.